So pretty much everybody in level 2 right now. Like, is everybody trading like GJ? Like, what are the pairs that y'all are trading for the people that's on?
For me right now is NAS 100, GJ, and gold.
Okay.
Yeah, and for me, I trade GJ, GU. That's in GA. That's pretty much it.
GA. Okay. All right. And I was in the group chat a little bit earlier, and some people were saying like they had troubles with like fibs or was having trouble with like different scaling opportunities. So is that something that you all are like having trouble with or anything? Because I don't want to just be going over something if like y'all get it already.
So me personally, and I'm not sure about everybody else, but my biggest trouble is multiple time frame confluence. Like, yeah, and just keeping the same bias on lower time frames as the bias that I have on the higher time frames. I get mixed up when I get to the lower time frames.
Okay. So that's something we could talk about. It's like multiple time frame correlation.
For me, I want to get more understanding of the fib. Basically, just a Fibonacci and also quarter points. I've been watching the videos on and off because of my schedule, so I'm getting a little bit of understanding. So it's just weird to put them in key points. What time frame should I use quarter points and how to use my fib in there? I understand the candlestick patterns and price action so far.
Okay. Well, yeah. Well, most of like for quarter points, I know. Well, what Drew goes over is like quarter points and stuff like that. I didn't like learn trading through like quarter points and stuff. I use like main resistance and support points based off of like the weekly and daily time frame. Like, and that's basically like what I usually take my orders off of. But I'm pretty sure the concept is the same. So I try to dive into that too as much as I can. So yeah, like let's just look at GU for instance right now. And this isn't a pair that I trade.
Okay, I have one more question before you continue. This is going to be recorded, right?
Yeah.
Okay, so I'm only going to hear you because I'm going to put my phone in my tower bag because I have to move to like different sector around the tower right now. Okay. But I can hear what you're saying.
Okay, perfect.
All right, thanks.
All right, so yeah, take just make sure that if I can hear it good first. Anyways, all right. So, as far as multiple time frame correlation, right? Like that's just basically knowing what time frames you need to be on for like certain reasons. All right. So, if, for instance, like we're at the 9th day of July, 2020, and just looking at where we are on a monthly and what information to be valid, right? So we always understand that we're gonna be looking at everything that's pretty much like left of the screen, like going this way, right? But I'm not gonna be too concerned about like what's going on back here or nothing like that back in 2007, 2011. Like pretty much we just want to stay with what's relevant, right? So everything from like this point over. is what I'm gonna be looking at, pretty much. I'm gonna keep that like a red color so y'all understand. All right. Monthly time frame, I understand that, you know, I had some support that was being held up along some of these level points that we teach about in the 5-day course with Willing. But I know supposed to take over going over 5-day quarter points if he's been teaching how we've been teaching, but for the most part, it's the same thing. We're looking for a main point of support that's being tested, so that way we can understand the directional bias based off these time frames. So here we see that we have a strong support because we have multiple candles that's testing this one price area and rejecting off of it, right? We see it was respected many times. Also in the past, it's been tested along the same way. But once we came up here and seen resistance, we had this test of support again. That was recent support, and then we end up having this break that happened right here, right? This break right here let us know that we're still pushing in this bearish direction, along with this lower high point that was made. But this break of support alone let us know that there's no more, like our buy shouldn't be bullish as far as this monthly time frame that we're looking at, right? So from here on out, we're looking for another point of support that we have found that was along this area, but it didn't reach our 38.2. So we know this can't be considered a lower high point, and it also respected a monthly key level right here, made another minor lower high point, and came and made major support right here. So even based off my fibs, just off the monthly time frame, you know, so I could begin on my largest time frame getting the biggest outlook, right? And the reason I want to get this biggest outlook is like being up in the plane, you know, while you're far up, you know, you can't see so much detail, but you can see the main structure points. And that's what we want to see by getting being on this monthly time frame. All right, so we have our point A that's up here, right here. This 1-2 made our resistance. We didn't count this because this never made an official lower high point, even though it is a lower high point on this time frame. But to us, it's not what we call a retrace point. So we came down, made my support right here. So this would be my point B that I was looking for. And then my point C was up here where I had this 38.2 that was never broken. It was tested, and it also tested what is this? My weekly key level right here. Right? That gave us confluence, right? Because we have this was never broken. We never seen bullish. We seen a bullish candle that formed right here from open to close, left some buyer's exhaustion, came, made a lower high point on a lower time frame, and maintained this level of resistance right here. So even understanding that, we could put like a minor random line, you know, right there on the median of those wicks, because that's where average price was that didn't break. Okay. So we have that lower high point that was made right here. So from this point on, we understand what our Fibonacci, what that retrace is. That's a 38.2, and we were expecting aggressive push to the downside to try to break past this low point and make a new lower low, which would be our negative 27% right here. That is what would be our goal for this monthly time frame, just on this type of outlook. Okay. Just seeing how things have been forming, right? Coming from all this bearish pressure, you know, maintaining resistance. You know, you are making minor higher low points in this area. And even if you're making minor higher low points, it's always okay to slap on like a little counter trend line up in this area, right? Just so you can start to understand, you know, where's price being gauged at and where's most of that momentum at in this market. So in this market, you've seen that you had minor bounces. You had it get respected. Even if you were to adjust this after price came, you still seen that you had a bounce of this trend line. Your point A could do a point B right here. Or like I said, it's always subjective, right? Could do a point B right here into the future. But me, I feel like it looks a lot better, you know, being this way, especially being on this larger time frame. So seeing how many times it tested this area, you know, it could have gave you some type of confluence to the upside if you was able to catch this. But seeing that the market came and broke, went into that seller's momentum, also came back, like I said, gave you this push here, tested this back counter trend line now, which gave you confluence to push down to the downside, maintaining, giving us that counter trend that we wanted to see for the buyers, respected our 38.2%, giving us an aggressive push to the downside with our goal being negative 27%. Now there is a lot of support down here. As you can see, this area's been tested. 1, 2. I'm gonna put these a different color too. So you see these areas, and then 3. This area's also been tested. All right. Right. So seeing along this area, we do have strong support. So we could expect, counter trends along this area, but understanding what the overall flow and the overall direction of this market is going, it's definitely more bearish than it is bullish. It's just the fact that we're at major support right now. So you could see minor retraces. And even if there's ways like, you always want to see to understand, where the momentum is, you can always measure the pushes, to see like where most of the momentum is. And as you can see, this push from here to here, you can measure and see, okay, sellers were in the market for this amount of pips, buyers were in the market for only this amount of pips. And then the same way, even when you're on lower time frames. So seeing how we got our overall picture now we want to work within the area that we're in, which is seeing that we had a lower high point right here at 38.2. We came down, made support, gave you like a 23.6 move, which is a continuation. Then it continued, made support again right here. And then also gave you 100% retrace. And with this 100% retrace, it came back and just been in this consolidation area going sideways, basically. So as you can see, the market's just been going sideways in this consolidation range. Right. So now that we got our overall, we work our way down to the weekly time frame. And with the weekly time frame, I like to really start to dig into structure. So we understood that this was our lower high point. That was at our 38.2%. We had a break of support that started to give us our transition that happened right here. Came down, gave you a lower low. Came up, gave you, like a minor lower high point on this time frame, which is just really like a 23.6 area, which is like a continuation area. Right. And the way that you start to take advantage of these areas, since you got your major resistance points, you can highlight these areas, put in different colors, or just use random lines. All of these areas is what you're just trying to see where price gets like confused at, right? You want to see where price starts to reject or either break those areas, because that's where you can expect a big move to happen. So I'm being able to understand these larger time frames is what's going to help you be able to take advantage of the lower time frames, right? So I understand what I'm looking at as far as on a weekly time frame. I'm dropping down to the daily. Then from the daily time frame, I'm basically still looking for structure points. Now I'm looking for mainly like my lower highs, lower lows, like I said, higher lows, higher highs, or I'm looking to use my Fibonacci. I'm looking at candlestick anatomy. I'm looking at where can I draw trend lines if they're trend line opportunities. These are the type of things that you pretty much want to work through, far as like when you start to begin your workflow. So that way you can understand, you know, what areas do I need to be taking advantage of? What areas do I just need to be analyzing? And those things, you know, what areas are am I seeing tested? Where can I find confluence at? And once you can start to answer those questions and work through those, that's when you can start to have certain confirmations that you could be confident in taking those trades. So like for instance, right, being able to understand that, okay, I have a weekly support that hasn't been broken along this area, right? I had a break of resistance right there that began to happen. And you started to see all these areas start to break, right? And then that's when you begin to start to pull out your fibs and take advantage of these certain opportunities, being point A, point B, 100% retrace, bullish move. You see what I'm saying? And then just being able to understand your candlestick anatomy to get in on those lower time frames to take advantage of areas like this. So if I see, for instance, this exhaustion, boom, rejected, no type of volume, no type of volume, no type of volume, gap down, you know, and then I'm starting to see some type of volume pickup in the market in this zone, right? Because I already understand that the market broke a level of resistance. I'm back at the level of support. Now I can go down to my 1 hour time frame and start to look for candlestick patterns that'll help me take advantage of this whole area. You see what I mean? So it's being able to get in a certain area, for instance, in an area like this, to be able to break down, to be able to break down and have instance, you know, that'll help you flow along with the main. So that's basically how I use multiple time frame correlation. As far as like using the monthly, weekly. The monthly, I'm usually looking at, you know, maybe in the middle of the month, like around 15th, the 20th, and then the end of the month, just to kind of gauge what I'm going into for that next month. Like where's that major momentum and volume at? Because if major momentum and volume is bullish, then I know I want to be looking for majority buys and following along with the majority of the momentum. I know those would be like short term things, you know, stuff like that. And then same thing with the weekly. Like I'm looking at the weekly, usually like on Wednesdays, you know, late Tuesdays, Wednesdays, you know, depending on news and stuff, Thursdays, and you know, just seeing how where's the majority of that momentum at. You looking at the weekly on a Sunday, you know, soon as the week starts, isn't really going to help you too much, you know, because there's not enough data within that candle that can help you with your bias. So it's like being able to break down the candle in that sense and know, you know, when it's the right time to be looking at this information and this data, if this data is valid, you know, is important. But other than that, I would say, you know, using the 4 hour time frame, you know, daily time frame, 4 hour time frame for your main technicals, and then being able to break those time frames down to your hour and then entry time frames, 30 minutes, 15 minutes. That's what you'll see the in 4 hours, everything should really work out. But as far as your main technicals, as far as your quarter points, I would say stick to whatever that main time frame that you're analyzing on 80% of the time, which should be, your daily and your H4, you know, and use those quarter points and things like that to actually set up for the bigger moves and then be on M30, M15, or whatever the case may be, whatever time frame that you're comfortable entering off of to scale in and you know maintain your orders as well. So like even on GJ, I think I had it up. Like I had.
Hey, I have one more question for the fib, right?
Okay.
What are the three major numbers you should only focus on if you're looking for it to go buy?
I mean, everybody looks at the Fibonacci levels like different, for real. Like, but how I was taught to look at them as like there's our 23.6%, which means is you can expect some type of consolidation and continuation. There's the 38.2, which is considered your first official lower high point in the retracement levels, and you can expect an aggressive push back to your take profit, which could be negative 27%. And then there's the 50%, which isn't considered a PRZ level. It just lets you know that there's a even balance between buyers and sellers in that market. There's the 61.8 that's tells you there's a moderate put. You could expect a moderate pushback to the downside. And then 76, which is a very slow retracement back to the downside. 88.6 is very, very slow. And then you have your full 100% retrace, which is, just considered a full retrace at that point.
All right, understand.
Mm-hmm. But yeah, it's very in depth, and being able to take advantage of your fibs, like I said, to be able to use them on any time frame, but to mainly focus on them for your bigger moves on your analyzing time frame, which is going to be your daily time frame or your H4 time frame.
Mm-hmm.
Same with your quarter points. Like make sure that whatever structure points you're drawing, as far as technicals, whether that's support lines, quarter point lines, trend lines, you got to make sure that it's on that main analyzing time frame. And understand that on those lower time frames around that area, you're gonna see more detail. So it could look like something broke on H1, but it really didn't break. It was just testing on H4. So you have to be patient as well and just understand that it's a waiting game too.
Okay.
Yep.
Thanks.
No problem, man. But yeah, I just wanted to go over these scaling opportunities too, because I know somebody was talking about scaling opportunities. So on GJ, as you can see how I had it drawn up, I had certain resistance over here from the daily that I seen. Right along this 135, 280 area. I seen that the daily candles been respecting this area for a long time before you had this which could look like a break, but when you go on the weekly time frame, it's just a bullish bearish candle, so it's not really considered a break all the way yet, right? It's basically like a big ass retrace. Still maintaining that seller's momentum for the most part right now. But as you can see, it's making higher low points, so the buyers are strong within this market too. That's why it's been consolidating the way it has been. But people have been able to take advantage of both sales and buys within this market. Okay, so I just wanted to say that first. But on the 4-hour time frame, pretty much seen this double bottom happen when you had support, and then you had another level of support that was made right here. From that point on, you had a lower high point that was broken on the lower time frame, such as like M30, as you can see right here, broke this area, right? So from point A to point B, broke past 38.2, tested at 50, gave you like a double bottom pattern right here, gave you this engulfing pattern, like this engulfing variation, right here. All right, hit our negative 27% perfectly. So that's TP. Even being able to catch this move, you know, anywhere from 100 pips to, you know, 70 pips, right? Then you had a level of resistance that was being respected along this area. Okay. And you understand that you have major resistance up here as well. A level market began to retrace, gave you a bearish engulf and began to retrace along this level, but it was support that was being held up from this previous resistance right here. So you got resistance that turned support, right? That went up, made resistance again, consolidated in this area. Let's see. All right, should be good to go now. All right, so yeah. So boom, you had support that was being tested right here. Tested this zone again, right? Gave me a bullish variation along this area. Boom, took the buy up to previous resistance. As you can see, like 62 pips. Then came, made minor support right here. Tested resistance again, broke. Hit the trend line, gave you a trend line opportunity, point A, point B, but you really can't take advantage of it yet because it's just your point B is what gives you your trend line. So you really want to take advantage of it at your point C, point D, etc. Okay. But me understanding that, okay, at this trend line opportunity, which acts as a dynamic form of support, okay, acts as a dynamic form of support. I understand that this is also a higher low point. Yeah, right back. So you had a high low point that happened right here. You had another high low point that happened right here. Right? With the bullish engulfing. So I understood my risk at the same time. Right? I knew it had to be a lot of bearish pressure just to break this trend line right here. Right? So stop loss was set around 30 pips. Took the buy. As you see the result, 77 pips. Same, man, and really, it's just doing the same thing. Really, you know, high low point, boom, and that's really how you work your fibs. Is being able to point A, you know, point B, see where the market can find support at 61.8. So I understand that it could be a moderate to slow retracement back to my negative 27%. So what it did was came up to test this little resistance over here. Gave me a little pullback to let me know that it's ready. Boom, got in. Went to my major resistance, which was TP, which I told you was based off the daily time frame. And then, yeah, the other market's just breathing pretty much. But that's like scaling opportunities, basically. You see, I'm on the same time frame, which is my entry time frame. The setups was based off, you know, understand that we had an H4 double bottom pattern that happened right here. Yeah, H4 double bottom pattern that happened right here. We had a break, a level of resistance on the 30-minute. Also started to break on H4, as you can see. So once we got up in this area, understood that the market continued to hold support and make higher lows on our 30-minute time frame, went ahead and took advantage of it. You know. So yeah, that's pretty much like how you scale in. You know, is this order is based off this order alone. You know what I mean? Each order that you take, I said that wrong, but each order that you take should be its own, like has its own reasons for you getting in. This order was based off of support, resistance, turn support right here. Boom, seen the opportunity where I didn't think the market was gonna break and I had minimum risk opportunity. Take advantage of it, ride it up to the next point of resistance. Boom, let the market breathe some more. Understanding that this is the lowest point the market has to break in order, like for me to change my bias, the market would have had to do this, come down here, and then make like some type of lower high point in this area. It didn't do that. It gave me a trend line opportunity. I took that. I seen that the market didn't want to break the trend line opportunity up in this area. Had another minimum risk opportunity, 35 pips, 77 pips. But my stop loss really wasn't 46 pips, bro. I really had that shit like 30 pips. I'm not gonna lie. It was like right under my counter trend line. My trend line. And boom, took it to my next resistance point that I had that was based off my daily time frame, because I seen that the market all along never wanted to break that area of that 135 to 80, and I understood that all of this was just a big ass retrace. So yeah. But yeah, that's what I just wanted to go over with you all. Scaling opportunities, a little bit of time frame correlation, and understanding when should I be on what time frame. 80% of the time you should be on your analyzing time frame. Which is, like I said, gonna be your daily time frame, H4 time frame, and then when it comes to you breaking down and getting ready to enter, like I said, that's like 10% of the time, 15% when you want to see more detail. That's when you go down, and if you need to see more detail in those areas, you can scale into like the 15, and making sure that you're also getting in off candles that are attractive. You see what I'm saying? Like, look at this candle. That's attractive, even though this shit pulled back, that can be expected. It's GJ, 16 pips. Okay, cool. Stop loss was, 30 pips, and it's under a lot of support. Right, so that's an attractive candle. Boom, then right in the profit. Right, same thing here. 1, 2. You want to make sure, even if it's 1, 2, 3, 4, 5. All of this looks attractive, right? Because you had somebody's exhaustion, cool set exhaustion. You understood. You already had a higher low point right here. You had it coming up here, just testing this resistance that was already up here. But you understood that on that lower time frame, you still had higher low points being made. You had higher low point, higher low point, higher low point, higher low point. So, and all of this looks attractive. So it's like, boom, take it up, set your stop loss, let it flow. Boom, take it to that previous resistance. You see what I'm saying? That's how you want to trade. It's like, let the market come to you, take trades that look attractive, and then set your stop loss, and let the market flow to your TP, man. Don't try to overcomplicate it. But that's all I have for you guys. Any questions? I muted you all too, so if you do got questions, just let me know. Or just unmute yourself. This is recorded. I'm gonna be sending it to Drew, so that way we can put it in a level 2. I did want to say, like, I'm gonna be working with you all. So if there's anything like questions or whatever, you can add me in the group. I can answer them or whatever. I'm gonna try to be doing these on Wednesdays and Thursdays. Probably 1 in the morning on like some Outlook stuff, kind of like, just what you would expect for the day type thing. And then probably 1 like around this time, like around like 4:30 on Wednesdays and Thursdays. So, and maybe like I might do something on Sunday just to start the week off right. But we'll see. But if there's something you all enjoy and like, I'll definitely want to make sure we all out here catching pips and things like that and getting the right education, because it's just going to be cutting the learning curve, and that's the whole purpose of us doing these things and these teach backs and stuff like that, so you all can benefit from it, and you all don't have to blow account after account after account if you all just truly listen to what we're telling you in the game that we're trying to give y'all, because we want everybody to be profitable. It's enough for everybody to eat. We're in a world now where, this is all about digital currency and, being able to have cash flow and, being able to free up your time to work on, the tools and entrepreneurship things or whatever it is that you truly passionate for. So that's why we're here, that's why we're doing this, and we would want to continue to do this and help and pass it along, so that's all I got for you all. So I'm gonna link with y'all probably next week sometime, but if you need anything, like I said, just hit me up in the group chat. I appreciate all y'all.